Welcome to this stock analysis blitz for BHP Group. Remember, I do these videos just for fun, speak to a financial advisor. BHP Group are the UK's largest miner. They represent 33% of the precious metals and mining index. 8% of their EBITDA comes from coal. As you can see, there's definitely upside potential for the price of coal. So this definitely gives BHP Group some nice spice, even though at the same time it's quite not enough to be too dangerous if it goes the wrong way. 29% of their EBITDA comes from copper, and copper is of course one of the most coveted of all of the resources. The price of copper continues to grow extremely strongly, and BHP Group claim to have the world's largest copper resources. So this definitely does make BHP Group quite attractive, because you're getting your hands on quite a lot of copper at a much lower price to earnings ratio than with some of the other copper specialist stocks. They used to have quite a lot of nickel involved with them, but having just announced that they believe nickel to be in a 10-year oversupply situation, they've now suspended all of their nickel operations, and this led to a really nasty 4 billion impairment last year. The mainstay of this company is iron ore, and if you look at the last video I did, I go into detail about the price of iron ore, and I'll come back to this later in the video. They do, however, claim to have the lowest cost iron ore reserves of any of the majors. Most of their resources are in squeaky clean places, so that's good not to worry about. Copper, though, is mostly in Chile, so before going in, I'd want to have a bit of a closer look at that, because I know there have been some issues in Chile. But otherwise, most of their resources are in quite friendly locations. And in terms of future focus, they're currently investing a lot into potash, with about 11 billion of capex planned in Canada, with production planned to start in 2026. So a bit like the coal, I regard the potash as something that gives a bit of spice to this stock. Is actually something that I've been interested in. I quite like the idea investing in fertilizer and food in the future. And as you can see, there's quite some potential upside for that based on the historical data here. So that adds a bit of spice, again, just like the coal. So looking at their numbers, and we see that the revenue has increased going back to say the baseline of 2019. It's up quite a bit. However, their expenditures gone up a bit as well, particularly employee costs. We notice these nasty impairments. I've already explained the nickel there. They have a bit of a habit of having their energy in the wrong places, as we can see from these nasty impairments here. This is a slight tarnish on the company's management in the long term when you see these impairments like this every now and again. And it's notable their financial expenses trending up, and of course debt is more expensive now. When I go down to their long-term debt, we see that they have 20 billion of debt, which I don't like. We see that their net income mirrors fairly closely the fortunes of the iron ore price, as I guess you'd expect. And when I look at their net income history, we saw that when we had the boom in the iron ore price, obviously you see a widening, and there's a nice kind of pattern here. So we're currently in a fairly uncertain period. Actually, if you take account of the nasty 4 billion impairment in 2024 because of the nickel problem, that purple dot I've put there accounts for that. And you see that they have a trend of declining net income 3 years on the trots now, confirming how their performance is going to be married to the iron ore price. Got a waterfall chart of their profit and loss statement. And of course, as you'd expect, depreciation and amortization is quite a significant drag on the profitability, even though this isn't actually a negative cash flow. It's interesting also the significance of tax for these resource stocks. And overall, their net income of about 10 billion, that on its own does seem quite attractive. They're making 10 billion, but their market cap's only about 120 billion. So here I've got a treatment of their cash flow statement, And you can see how much these companies have to reinvest into capex, 9 billion. And of course, a lot of this is going into potash. So are they making the right call on potash or not? Overall, they have a free cash flow of about 12 billion. However, there where we see that they're forking out 9 billion on dividends, this puts them at a kind of rather tenuous inflection point. Most of their free cash flow is they're having to pay out on dividends. This means that if the iron ore price does crash down from this technical level, which based on their stock price chart is perhaps what the market thinks is going to happen. Well, if that does happen, they won't be able to cover their dividends anymore. And so, although I've established that they're fairly priced at the moment, back at the 2019 reference level, and bringing in a tasty 10 billion a year with a market cap of about 120 billion. From looking at the cash flow situation, I'd say they're in a exquisite inflection point. If the iron ore price crashes down from this technical pattern, this will be fairly disastrous for shareholders. However, if it keeps on going with this longer term trend and bounces back up here, then right now you'd be buying BHP at a great price. I've started doing my own discounted free cash flow valuations on stocks. I'm a little bit stingy with my approach, but my best case was actually a match for 3 different analysts I dragged off the internet. So that pretty much confirms that they are fairly priced at the moment. It's just a question of, are you ready to take a gamble on the iron ore price? So that completes this video. I hope you found it useful, and speak to you at the next one. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.